All right, let's get straight to it. Quick answer first. My Model S shared max paying bottom window for both Bitcoin and Ethereum is from June to October 2026. Now, I'm going to show you exactly how I got there using 3 simple scenarios. Just a reminder, this is not financial advice. It's purely for educational and entertainment purposes. Okay, here's the entire model on one screen. Go ahead and pause to screenshot it if you want. Got it? Great. Now I'll explain it step by step in simple English with no hype. Historically, cycle lows for crypto often show up about 2+ years after the Bitcoin halving. Looking at the past averages, Bitcoin tends to find its bottom around 29 months after a halving. Ethereum is a bit quicker, usually bottoming around 26 to 27 months after the halving. So let's use the most recent Bitcoin halving as our anchor, April 19, 2024. If we project forward from that date, Ethereum as central low zone lands around June to July of 2026. To give it a more practical window, let's say May to August 2026 for Bitcoin, its central low zone points to around September 2026. Again, giving it a practical window, that will be from June to October 2026. So when you overlap these two timelines, the shared max paying window where both assets could plausibly hit their cycle lows is from June to October 2026. Now, Ethereum might bottom earlier in that range, and Bitcoin might find its footing in the mid to late third quarter. But really, any point within that window is plausible for both. To build this model, we also need to consider the cycle peaks. Let us assume the key cycle peak markers in this model are as follows. Bitcoin prints a new all-time high around $125,000 to $126,000 in early October 2025, and Ethereum prints its new all-time high around $4,950 in late August 2025. If we measure from the halving, this means Bitcoin would have peaked roughly 8 months after the halving, and Ethereum would have peaked roughly 16 months after. This matters because historically, major cycle peaks often do happen around that 16 to 18-month zone post-halving. Now, I know what you might be thinking. It can feel like the cycle top may have already happened, but that's not guaranteed. This is just one scenario based on historical patterns. Next, let's talk about how far prices could fall. In the last 3 major cycles, Bitcoin's drawdowns from its all-time high to the cycle low have been brutal, roughly between -77% and -85%. Ethereum has historically been even more volatile, with drawdowns between -81% and even -94%. But today's market is different. It's more mature. We have ETFs, institutional players, and much deeper liquidity. So it's reasonable to also model a shallower outcome, a less severe drop. That's why I am using 3 simple scenarios for the drawdown. A mild scenario at -60% from the all-time high, a base case at -70%, and a severe scenario at -80%. These aren't predictions. Think of them as risk bands to help frame our thinking. I'm anchoring these scenarios to those hypothetical 2025 cycle highs we just talked about. A Bitcoin all-time high about $126,000. And an Ethereum all-time high of about $4,950. So let's apply the 3 bands. For Bitcoin, a mild 60% drop would take it to around $50,400. The base case, a 70% drop, would be around $37,800. And a severe 80% drop would put the price at around $25,200. Now for Ethereum. A mild 60% drop lands at about $1,980. The base case 70% drop will be around $1,485. And the severe 80% drop puts it near $990. So what's the interpretation here? If we get a classic old-school crypto winter, our base case cluster is roughly Bitcoin in the mid-30,000s and Ethereum in the mid-1,400s. However, if this cycle is structurally stronger and the drawdown is milder, Bitcoin might hold closer to that $50,000 to $60,000 range. and Ethereum might stay closer to the $2,000 to $2,200 level. Again, I have to stress, these are bands, not magic numbers. They are just potential zones. Here's the mental framework to use with this model. Remember, this isn't advice, just a lens to look through. If the 4-year cycle continues to rhyme with the past, the peak of this cycle likely happened in mid to late 2025. The deep value side, the time for accumulation, often shows up in mid to late 2026, which is roughly 2 years after the halving. So the broad planning ranges we can work with are, for Bitcoin, somewhere between 25,000 and 50K, with the base case clustering in the mid-30s to 40,000 range. For Ethereum, the range is about 1K to 2,000, with the base clustering around that $1,400 to $1,800 mark. But here's the big warning. The macro environment can change everything. Interest rates, recession risk, global liquidity, new regulations. The flows into ETFs, any of these factors, can make the outcome shallower, or they can make it much, much uglier. This is a scenario model, not a trading signal. So to recap the whole thing, our shared max paying window is June to October 2026. We have 3 risk bands, -60, -70, and -80% drawdowns. This gives us planning ranges of about 25K to 50,000 for Bitcoin and 1,000 to 2,000 for Ethereum. The map is simple. The timing window is June to October 2026, and we have our mild, base, and severe drawdown bands. But a map is not a plan. The real question is, how do you position yourself for this without trying to guess the exact bottom? That's what's coming next. In video 2, I'm turning this entire model into my 2026 BMNR playbook. It's going to be a clear step-by-step framework based on these exact bands and this timing window. No predictions, no hype, just a risk-managed plan. And then in video 3, I'll do the same thing for MSTR, showing how I'm thinking about exposure, drawdowns, and the patience required to get through a crypto winter. If you want to see that BMNR playbook, click on video 2 on your screen right now. And do me a favor, drop a comment below with either mild, base, or severe. I'll pin the top comment and use it to help shape the BMNR plan. Thanks for watching, and I'll see you in the next video.